Let's get to Win Thin now, global head of currency strategy at Brothers Harriman. And Win, I don't mean it to sound like this, but every time I see you, I go, oh, something bad must be happening in the markets because it's usually, it's the yen carry trade is blowing up, or it's the repo crisis, or, when we all start to get a little concerned about the financial plumbing. So has the storm passed now or no?
Hi, Kelly. First of all, thanks for having me. And you are correct. I tend to come on the show when things are going south. So I'm always happy to appear and sort of try and wade through all this uncertainty. So I would say we're nowhere near the end. We're really in the early days. The new administration has barely been in office 3 months. And to me, it's really the story's really been upended, right? We started this year with the U.S. acceptance story was really hard to argue against. Growth was around 3%. We were looking for an agenda of deregulation and tax cuts. And instead, what we've seen under Mr. Trump's second term is really a focus on the tariffs, deportations, and the DOGE-related layoffs. And the timing of that is very different. In the first term, he prioritized the sort of growth-friendly policies. And now we are far from that at this point. So that's part of the reason why we're seeing the dollar.
Understood. It's interesting now to watch the pause on the reciprocal tariffs happen while they're trying to get the budget bill across the finish line that would actually bring us back to more of the sequence we had in the first time around. So I don't know if it'll work or not, but we're showing the dollar index there when on the screen below 100, 99 or so. Now that level is not itself notable. It's just been the speed of the decline. So can you talk to us about what do you think the implications of that are? Do you see any evidence that people are shifting away from dollars or from U.S. assets?
Well, Kelly, at this point, it's somewhat anecdotal, right? We are hearing rumblings, as Ms. Yellen pointed out, of a loss of confidence in U.S. assets. But I point out that U.S. Treasury auctions last week went actually solid demand. So it's hard to say that there's a buyer's strike or there's a sell-off or dumping of wholesale treasuries. That will take time to work out. But we are definitely seeing strange price action where the dollar is weakening when it should be strengthening. U.S. yields are falling or rising when they should be falling. So it's a strange milieu of market action. The fear, obviously, is that we are losing confidence in U.S. policymaking. And I think I would have to agree with that. You pointed out the back and forth of tariffs. Markets like certainty. They hate uncertainty. They like transparency. They don't like opaqueness. And these are things that I think will take a while to regain the trust. But yes, I feel that the dollar is in a somewhat of a cyclical, man-made decline, given what we've seen over the last 3 months.
These are all small moves, though. I mean, I just heard historic bond move. I remember in '87 when I had a guy, I don't know whether it was long or short treasuries, but it moved 250 basis points in a session, or 300 basis points in a session. It was up. The bonds went up, the yields went down, as I recall. Do you remember? Were you around then? So
yeah, absolutely. I'm one of those old timers.
40 basis points. 40 basis points. Yeah. I mean, that's where we were 2 months ago, and it seemed fine. Now we're like, oh my God, the world's ending. It makes no sense to me. And even the dollar moves. Trade weighted. You do trade weighted, the dollar is at a high, isn't it?
Yeah, look. Remember, we used to have 5, 10 big figure moves in dollar yen and dollar mark. And yes, I think our perceptions have been warped by, I would say 15 years of sort of abnormal market activity after coming out of the great financial crisis. But in some sense, we are returning to normal, where markets are sort of moving a little more rapidly. But I would say that we know the Fed. Some of these markets moves there's a fear that they'll become sort of systemic, and we know the Fed from Fed comments last week. I think it was Governor Collins said, "Look, the Fed is aware of this. They're ready to step in if we have some sort of dislocations and crisis." But in my view, the Fed's not going to bail them out with rate cuts. I think they would add liquidity, something we saw back during the SVB crisis, sort of liquidity moves. But the Fed is in wait and see mode right now, given all this policy uncertainty.